let's get straight to someone who tracks the equity markets very closely. Anand Tandon, CEO of JRG Securities, joins us on the line from Hyderabad. Anand, thanks much for joining us. Do you think from what we've seen so far and the kind of pace we've seen, everything done in this one past week alone, it could be material in turning around sentiment even for foreign investors, and the inflows that we've seen are likely to continue?
Well, I think it is targeted only for foreign investors because many of those steps are something that the foreigners are the ones who've been clamoring for. So to that extent, I would imagine that what you're seeing in the market today is also a function of the buying from the overseas market. The domestic investor has not really been participating in the market either through institutions or directly. We do expect that if this rally were to continue, then I guess some participation will come because most people are trend followers.
Okay. Do you think that there is more legs even for FII investments to come in, considering that the withholding tax now being cut to 5% on all ECB loans has just come in? This, along with other noises in terms of some stability now getting reassured for the government, at least in the short term, has the ability to pull the market to say 5,800?
Well, in my view, the market was anyway headed to that kind of level, irrespective of whether or not there was a trigger from what the government does. But maybe it's happening all too soon, and therefore, to that extent, may happen faster. Withholding tax cut will make a difference in terms of near-term tax collections. Theoretically, it doesn't make any other difference. But in practice, I would imagine that there will be some erosion of revenue from there. So, from the foreign point of view, again, less tax in India is great news.
No, what we understood from treasuries, bank treasuries, is that it definitely makes it attractive for foreign banks and investors to buy Indian loans or to loan to India, loan to Indian corporates. Per se, will that mean a little more wings for corporate stocks? I mean, for the stock market?
Well, like I said, if you look at the international markets today, the fact is that it is awash with liquidity. And all central banks, in particular the Fed, have effectively said that infinite liquidity till infinite time, is the current mantra. So if you have got any kind of growth, it should be actually at a premium. The fact that we are not itself reflects the fact that our policies have been extremely anti-investor friendly. Now, if that were to change, especially for the foreign investor, and that is, I think, what the market government seems to be targeting much more than the domestic investor, then obviously I don't see any reason why more money cannot come into the country.
Anand, where are you positioned in the defensive trade? I mean, sell side still, you find analysts writing notes about defending ITC. Do you think the ITCs of the world will hold, or something like Reliance Infra, which is up 10% right now, will attract inflows given the kind of momentum that seems to be building up?
Well, I've been maintaining that the ITCs of the world are very well valued, and therefore only good for a market which is likely to be down or flat. If the market is showing signs of movement, it has to be done from the cyclicals, and I guess that is what you're seeing currently. Because if money is available, the delta in the prices, or for that matter, in terms of even corporate performance or corporate sustainability, will have to come from the cyclicals.
Okay. Anand, the other piece of reform that is in the works is the state electricity boards probably getting some kind of financial relief from their own state governments through some 10-year bonds or 5-year bonds. If that piece is set in motion, is there more legs in the rally for whichever piece you pick, power stocks, REC, PFC types, public sector banks, or do you think even that is played out because all these stocks have rallied?
Well, I think, public sector banks were actually quite cheap, and I've been arguing that, that cannot go to zero, so therefore those are the ones that would logically to be looked at. Also, all the companies which have lent money, which have, essentially Power Finance Corporation kind of companies, would obviously be big beneficiaries as well. The moot point is that that's a near-term leg up, just by changing the interest rates or the bonds. It doesn't solve the fundamental problem of the fact that we don't have enough people who pay for electricity. equity, and that's not likely to change. So, will this? We've seen this thing before, right? It happened about 8-10 years ago when the interest rates were reset and a whole lot of them became viable. The next cycle also the same problem will recur, but the market is very short-term oriented, and as is almost policy that the government is following. And from that point of view, near term, it is definitely a positive. And anyone who has lent money to these companies should be, should be exuberant.
Anand, one final question. Do you think it's prudent to be, sucked into this rally and buy because it still has more legs? Should you be chasing stocks that have been beaten down very severely, or does it still, make sense to stick with quality and not venture out because this rally may not last? It's not very certain.
So I don't think power companies, for example, are poor quality stocks. They are stocks which have been beaten down because of poor policies. So if policies change, I don't see any reason why you shouldn't buy them. When I said, you should, when you're saying beaten down stocks, you have to be clear about what's the reason for the stocks to be beaten down. If they are beaten down because of the fact that there's been a flip-flop on policy and therefore, the companies are going through a poor performance patch for the near term, I think it's a good reason to buy. If they've been beaten down because they've got into some serious trouble by themselves, or if they have international borrowings, and please note that, if you have domestic borrowings, it will be restructured, is my view. If you are talking about international borrowings, a lot more difficult for that to be restructured. So if you've got international borrowings, well, you have to bide your time till something comes through on that, or they are able to replace international with local borrowing and then subsequently restructure it.
Fair enough. Anand Tandon, we appreciate you taking time out for us. Thank you very much for joining us. So as Anand says, it is investor-friendly, foreign investor-friendly steps that have been announced, and that could, of course, take the market a little higher.